Good morning. Good morning. Good morning. Good morning. Hi. You can all see me clearly. आवाज ठीक आ रहा है. Hi Karthikeyan. Good to see you. Mamta, Inderpal, Srinivasa Raghavan. Audio, video all clear. All right. Abhishek Gupta. Great, great, great. So we will continue today's session uh, on macroeconomics, and we will continue our journey with interest rates. All right. So volume slightly low bol rahe ho, Srinivasa. Okay, let me check. Is it little better now? Is the volume little better? Okay. All right. So let's continue. So we will continue into the part 3. Okay, the part 3 of the session. Okay, and we will also look at stuff in terms of so so can somebody do a quick recap of what all we have done so far? What all did we study on interest rates so far? Can I have a quick recap from someone? A quick recap about what all we have discussed on interest rates so far. Yes, please go ahead. You can write it in the chat box. Keep writing. Please. All right. What else? What else? Why interest rate exists? Yes, RBI controls as a lever. Okay. Okay. Super. Great. Thank you. So, all right, let me. Today it is about the correlation between interest rates and the equity valuation, the valuations of the equity market. Okay. Uh, Perfect, Abhishek. Correct. So, today we are going to discuss that. So, let me ask you something honestly. How many of you track the Nifty every day but almost never look at the bond yields? बताइए. How many of you track the Nifty every day but never look at the bond yields? Okay. And okay, but देखो, the surprising part क्या है ना, before many major market equity market moves happen, the bond market usually reacts first. एंड कभी कभार हम लोग उसको इग्नोर करते हैं बिकॉज बॉन्ड डील्स लुक एक्चुअली बोरिंग. कोई एक्साइटमेंट नहीं है. नो हेडलाइंस, नो नॉइज, नो एक्साइटमेंट, बट अंडरनीथ द सरफेस द बॉन्ड यील्ड्स क्वाइटली टेल यू where inflation may go up, where interest rates may eventually go, how expensive money is becoming, and whether equity valuations are under pressure. देखो, bond deals ना are actually market's expectation machine. They constantly adjust based on inflation fear, liquidity conditions, growth expectations, and the future RBI action. And 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 this is why the big smart money actually tracks the bond yields closely. Because when bond yields starts rising sharply, it often means tighter financial conditions. It could also mean pressure on the growth stocks and the valuation compression will begin. And when yields stabilize or fall, markets start sensing relief even before the news hits the market. Okay? So today's session is not about becoming an expert on bonds or anything. आज हम लोग वो सीखेंगे कि how to read the signals that markets quietly give much before the major moves happen. Okay, so once we start understanding the movement in bond yields, we will stop reacting emotionally to the markets. Okay, perfect. We are all ready. Let's start the session. Okay, give me a minute. I'm going to download my presentation deck and we will get started. Just give me 1 minute. Sorry, the presentation deck is taking little longer. Perfect, got it. ठीक है. Is it visible? Can somebody confirm whether the slide deck is visible, please? Okay, great. Super, thank you so much. देखो, so we are going to discuss about how interest rates quietly shape the valuations in the equity market. देखो, हम लोग एज एन एडवाइजर ना कभी कभार एक डायलेमा में रहते हैं. कौन सा डायलेमा? कि वाई डज द स्टॉक मार्केट फॉल व्हेन इंटरेस्ट रेट्स राइज इवन इफ द कंपनीज प्रॉफिट्स हैवंट फॉलन. ये होता है कभी कभी कि बाजार क्यों गिर रहा है, प्रॉफिट तो गिरा नहीं, बट व्हाई हैज द मार्केट स्टार्टेड टू फॉल? बिजनेस तो सेम है, प्रॉफिट्स वही ठीक है, तो स्टॉक क्यों गिर रहा है? देखो, स्टॉक्स आर द फ्यूचर कैश फ्लोज. It's a summation of all the future cash flows discounted. When you buy a stock, you're not buying today's profit. You're actually buying the future cash flows of the business. कि आगे वो कितना profit generate करेगा. That the market constantly asks us what is the company's future worth today, future potential. इसलिए companies में ना जब results declare करते हैं, they always declare with the guidance, forward guidance. Okay, so what is happening with the company today is important, but what is happening with the company in the future is dramatically more important. So interest rates, we all know, are the cost of money, the cost of time. So if 100 rupees after 10 years is worth 100 today, obviously no, because there is the cost of money. Okay, and we are going to see the mechanics of this price to earnings. देखो, ये PE is a number that we many a times look at to figure out equity market cheap है कि expensive है and all of that. Now, investors reduce what they're willing to pay for the future earnings. The multiples shrink and the prices collapse even when unchanged earnings. ये होता है. Now, low rate environment में क्या होता है? Price to earnings हम लोग दे. EPS, let us think it is fixed. Earnings, एक कंपनी का earning per share, let us assume it is at 10 rupees. Okay? जब PE multiple 40 का मतलब 40 multiplied by EPS is the price. Price divided by earnings is the PE. So 400. High rate environment में क्या होगा? लोग उसको ज़्यादा multiple नहीं देंगे. Okay? ये जो PE compress करता है, why do PEs compress? PEs compress in a high rate environment. So if we are able to track whether in case interest rates are on an upswing, remember PEs compress होते जाएगा. The price will not go up as much compared to the earnings growth. Sometimes stocks don't fall because earnings weaken. They fall because the valuation expectations shrink, and these valuation expectations shrink or expand depending upon what is the interest rate environment. देखो, वैल्यू स्टॉक्स और ग्रोथ स्टॉक्स में अंतर ये है, वैल्यू स्टॉक्स में ना प्रॉफिट्स आर ऑलरेडी कमिंग, दैट इज अ स्टेटेड प्रॉमिस. ग्रोथ स्टॉक क्या बोलता है? प्रॉफिट्स आएगा, आज नहीं आ रहा है, आगे आएगा. वैल्यू स्टॉक्स में द कैश फ्लो इज इमीडिएट. ग्रोथ स्टॉक्स में it is far into the future. And value stocks suffer less during rising rates environment because cash is already there. ग्रोथ स्टॉक्स क्या है ना, इट इज ऑल डिपेंडेंट ऑन द फ्यूचर कैश फ्लोज एंड फ्यूचर कैश फ्लोज को डिस्काउंट करेंगे विद टुडेज इंटरेस्ट रेट्स एंड टुडेज इंटरेस्ट रेट्स अगर ऊपर जाएगा दैट्स विद ग्रोथ स्टॉक्स गेट हिट ड्रास्टिकली हार्डर व्हेन द इंटरेस्ट रेट्स स्टार्ट टू गो अप. सो देयर इज ऑल्सो ए हिडन ड्यूरेशन इफेक्ट इन इक्विटीज. जैसे बॉन्ड्स का लॉन्ग ड्यूरेशन, ग्रोथ स्टॉक्स ऑल्सो बिहेव एग्जैक्टली लाइक लॉन्ग ड्यूरेशन एसेट्स because their value depends heavily on the future cash flows. And this rate changes because उनके पास growth नहीं है अभी, उनके पास growth आएगा over time and वो future में आएगा and वो जितना future में जाते रहेगा वो उतना growth oriented company है, उम्मीद से बढ़ रहा है कि आगे पैसा आएगा and उसका future cash flows को अगर discount करना है, obviously the interest rates will have a far larger impact at the time of discounting growth companies compared to value companies. Okay. Now, which are the companies which are highly sensitive to rising interest rates? Technology, startups, real estate, high debt companies. Highly resistant FMCG, cash rich, utilities. Somewhere in the middle are banks initially resistant होता है but then they actually, because उनका NIM change होता जाता है, net interest margin. So there is a small little framework that you can definitely keep in mind. Value framework. V stands for valuation sensitivity. How dependent is the stock on the future growth? वो उतना sensitive हो जाएगा. Okay. Actual cash generation कितना हो रहा है? Current profits or future promise है? Leverage कितना है? High debt is actually higher vulnerability. Uncertainty कितना है? Higher interest rates, higher uncertainty, that means there could be a sharper correction. And earnings due, how far in the future of the earnings. वो बोल रहा है अभी तो मैं फैक्ट्री लगा रहा हूँ, उसका प्रोडक्शन शुरू होगा 5 साल बाद, फिर उसके बाद 2 साल बाद मार्केट में घुसेगा. So these are earnings, expectations are far stretched out into the future. As an advisor, during these kind of scenarios, how do you upgrade your conversation? देखो, generally amateurish conversation ये होता है कि रेट्स बढ़े तो मार्केट गिरा, ओके. सॉरी, क्या सवाल है? वाई टेक्नोलॉजी, एटलीस्ट इंडियन टेक इज मोस्टली, नो, दीज आर ऑल द स्टार्टअप टेक कंपनीज, स्टार्टअप टेक कंपनीज विच आर लुकिंग फॉर लाइक पेटीएम, जोमैटो काइंड ऑफ कंपनीज, नॉट द न्यू जेन. ओके. इंस्टीट्यूशनल एडवाइजरी लैंग्वेज क्या बोलता है कि हायर रेट्स आर कंप्रेसिंग फ्यूचर वैल्यूएशन मल्टीपल्स. मार्केट एक्सपेंसिव लग रहा है, वैल्यूएशंस आर एडजस्टिंग टू हायर डिस्काउंट रेट. लॉन्ग ड्यूरेशन ग्रोथ एसेट्स आर मोर सेंसिटिव टू राइजिंग yields. Please work on your advisory language. Now, how do these three things combine? The profits, the time, the cost of money. Markets are not just pricing the current profits. We all know this by now. They are dynamically pricing 3 elements: time, growth, and cost of money. And interest rates don't just change the borrowing cost, they change how the future itself is getting valued. All the best, everyone. Have a fantastic day ahead, and I'll see you tomorrow with the next version of interest rates. All the best. Take care. Bye-bye.